Alrighty, everybody, welcome to the show. Arturo, Swinburne, Sergio, Steve, Rob, Mad, Don, Mary, and General Rush. Good to see everybody. Welcome to the show. Let's do a poll. And let's start the poll. There we go. Higher or lower? Let's see what you think. How many of you are optimistic? How many of you are pessimistic? From here, we're basically kind of almost at the midpoint of the month. Had a relatively churny month so far, like first kind of 2 weeks ish of 2026. So, do we go higher? Do we go lower? This is the 9th trading day of 2026. It's crazy, right? We're almost 10 days down. There's 241 days left after today. So, welcome back, my monsters. Welcome back to the show. I had a bit of an epiphany. I was at the grocery store, doing the usual hunter gathering type thing we all do. Saw a guy in front of me staring down a shrink wrap steak like it was a museum artifact. Picked it up, looked at his phone, probably checking his bank account, right? Put it back down, walked over, grabbed a pack of hot dogs, and those aren't cheap either. I was kind of thinking, wow, this is the American dream in 2026. We've gone from everybody could have surf and turf to surf the web for a second job so you can afford the turf flavored hot dogs. You know, the headlines, of course, probably going to tell you everything's fine, everything's great. Show you a chart, throw a bunch of numbers at you, say, see, line go up, economy good, market go higher, everything fine. But you walk outside, 92% of your fully employed neighbors are secretly cutting back on spending. 92%. This is not statistics. This is pretty much the entire populace feeling like we need a neighborhood-wide yard sale on the standard of living in the United States right now. It's not too comfortable. I mean, this isn't some sort of temporary blip when we hit 92%. A new report titled the 2026 Cost of Living Crunch Report, which sounds like breakfast cereal for masochists, I guess, found that 17% of working Americans feel financially secure. Only 17. That's basically just the people who own the companies that make those turf flavor hot dogs, I guess. For everybody else, it's a daily tightrope walk. 60% of people are like 3 months or less away from financial ruin if they lose their job. That's not a safety net. That's hanging on by a thread. So, how did we get here? How did we get right here? Well, for decades, our leaders have been treating the national budget like a teenager with a credit card. Spend, I'll buy that. I'll buy that. You know, the national debt sitting at a cool $38.4 trillion, scheduled to be 39 before we know it. Your share of that, well, let's just say if you were paying your fair share, you wouldn't be getting a tax refund probably for the next several years, probably ever. All that money printing, all that spending, it's like they threw a multi-trillion-dollar party. And now we're going to have to pay the bill at some point. We have this bill taped to our forehead, and we've That's a big problem. But here's the thing for us savvy traders out there, for people like us, a crisis is an opportunity. It's just painted in a different shade, right? When the herd is panicking, when everybody's trying to figure out what to do, we should be the ones taking notes. So let's talk about where the smart money might play this and how we could take advantage. First off, let's go back to the guy in the grocery store. Putting back the steak, buying hot dogs. That right there is called trading down. Millions upon millions of Americans are doing the same thing. They're skipping fancy organic stores and heading over to discount retailers. First opportunity, companies like Walmart have been absolutely making a killing right now. WMT, Costco, COST, finally turning the bottom. Dollar stores, Dollar General, Dollar Tree, they're thriving. Ollie's, also, they're all set to thrive in this trade down economy. They're the kings of the trade down economy. The dollar stores in particular have been not doing so well in the first part of this reshuffling, if you will. But all of a sudden, they're starting to catch a bid. Now, while others are wringing their hands, these guys usually start ringing the cash register. Another one, Five Below. Now, second, no matter how broke people are, you still got to buy toilet paper, doo-doo paper. You still got to buy your toothpaste. You still got to buy your soap. You don't want to be the stinky kid in class or the stinky guy or girl at work. These are called consumer staples. They're not glorious investments. They're not exciting. They're defensive. We talk about, it's funny when you listen to stock market pundits, they talk about defensives in two different ways. Defensive as in shoot missiles at other countries, and defensives as in protect your account in a downturn. So these are defensives, like people got to buy them no matter what, consumer staples. So things like Procter & Gamble, people stop buying a lot of things, but you can't really stop brushing your teeth or you're not going to have teeth. They're boring. They're beautiful stocks that provide stability when the market turns out to be a roller coaster. And third, when people start losing faith in paper money, it's being printed into oblivion because the debt we just keep rocking and rolling debt and spending the card. Where do you turn? You turn to the one thing that's been considered real money for thousands of years, gold. Making new all-time highs again. The big banks, the ones who helped create this mess, are now predicting gold probably going to hit 5,000 at least this year. It's your financial insurance policy against the world going mad. And then there's the dark side of the whole thing. The unfortunate but profitable reality of the situation, with U.S. household debt at a record $18.6 trillion and well over $1 trillion of that just sitting on credit cards. What happens when people can't pay? The debt collectors come a-calling. It's not a pretty business, but companies in the debt collection space, well, they're a direct play on the crisis. Edgy move, for sure, but it's a reflection of the economic reality that we're currently sitting in. Repo companies, things that repossess and debt collect, that's a place to potentially make some money. And look, we're kind of in this quandary, right? We're either going to do a recession or we're going to have massive inflation. There's no in between. There's no threading the needle here. We're going to have more inflation or we're going to have a recession. One or the other. That's kind of the sad reality we're sitting in right now. There's no way out except through one of those two paths. The numbers they don't really lie. The American standard of living is under extreme stress for a lot of people. The majority of people, 92% of people. But it doesn't have to crumble for you, necessarily. While everybody else is being forced to cut coupons, maybe sell their old furniture just to buy a pack of hot dogs, you could be the one taking advantage of the companies that they're still buying from, buying the products they can't live without, protecting your wealth, your real assets. So be careful out there. Things are still not the greatest. And I don't know how we turn the corner, like, quite honestly. Now, coming up at 10 today, supposedly the Supreme Court decision on whether the tariffs are going to be allowed to fly or not. We'll see if that causes some market chaos. So be aware. That may or may not come out while I'm still live. While we're kind of talking about all this, though. The screen back up. There we go. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining. It's not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade anything, you might lose money. Be careful out there. Nobody's watching out for you more than you. There's just so many people think that the government's going to protect them. Somebody's going to help them out of this jam. The only person that's going to help you get your life on track and your situation better is you. Taking a vested interest in your financial well-being is probably how you do that. So welcome to the show, everybody. Popping over, looking at my morning list here. Jumping down. ES made a little spill last night, but very clear on the chart here. Higher lows all the way across for the last week or so. This could be a breakout. We could be winding up for a breakout. It's a sloppy, overlapping, hot mess of one, but we could be on a path to go ripping on up here, well into the 7,000s. Not really that far away. Still got this wheeze. NQ could be set for tacking on maybe another $2,000. We have not been... Take a look at this right here. On this daily chart, we have not been down to the roadmap line on the daily for quite some time. We've not been up to a new high since October. This could very easily, and we've got this trend, uptrend going here. If we hold on to that, very easily we could spike right up here, tag the highs, and then take a spill. Very slightly making this little wedge thing, so unpredictable. Be careful. I'm seeing it more and more. There's a unpredictability about what's happening. Even the option market. I use been showing off the bullflow.io with the gamma exposure, trying to read the tea leaves of options traders. Beyond 0 days, there is not many players playing very long term right now. That leaves things a little bit open for a bigger move to take place. So we may see a pop and a drop in the not too distant future. We may pop into February and then take a spill. Russell is set, like this pattern right here. It's getting a little over its ski tips, but it's set for a pop up here. 2740. Now, on the smaller pullback we did here, we are hitting the 1272. This could bring a temporary kind of pullback, retest the breakout from that high back here before we push on higher. So starting to be less clear on exactly where the next twist and turn comes on Russell, but that would kind of be what I expect to do. But if this doesn't hold right here, opens the door for bigger downside. So the risks are increasing for bigger downside to occur on Russell. Oil into the roadmap line, as I thought we might do. If the situation in Iran escalates even more, probably going to go back up here in this vicinity. Should be interesting. Like I said, when we get down here, stability in the Middle East, rhetoric, things happening, tends to ramp up. Funny enough, that's exactly what's going on, and prices are going to go up probably. I mentioned it for like 6 months coming into this, that Iran was probably going to start some stuff again. If we got down in here, that's exactly what happened. Gold pushing out the new highs. If inflation, inflation may be the path we take. We don't have to crash out in a recession. It may just be a path of inflation, and it just be sucky inflation. But here's the thing: market prices don't reflect this big inflation that's going to have to take place. So we're going to see a broad brush repricing of pretty much everything. Our $1 trillion companies here, and funny enough, silver has climbed up to the number 2 position here now. Now bigger. The entirety of silver is now bigger than Nvidia. And went from way down here all the way up to number 2. It's crazy. But these companies right here, these trillion-dollar, multi-trillion-dollar companies, might reprice double, triple. It depends on the inflation. And I talked about this for a long time, that we may have been in the second act of inflation where we thought we were in an all clear, and then we enter the third act where things go a little crazy again. All of a sudden, the prices that we all knew for years, almost laughable. It's, for a long time, cars cost like less, about $1,000. And then for a long time, it seemed like they cost, 10, 15, 20,000. And now all of a sudden they're 40, 50, 60,000, sometimes 80, 90, 100,000. Maybe cars go up to 300, 400,000, and the money's just laughable. That's what inflation does. Add zeros to it, but zero's still zero. So if you don't have a job, it seems like ridiculous to try to get to any meaningful number. Takes wheelbarrows of cash to do anything. That's what inflation gets you. And the only real solution to the debt would be inflation. Inflate it to the point where $38 trillion is laughable. Kind of sucks, but I've said for years that that's the one real solution. And that might be the path we take. And here we are. Bitcoin. So far, sticking the pop last night. It was popping while I was talking last night. So far, we're hanging on to it. The roadmap line's still up here, right around 99,000. If we can get through that, the next upside resistance is at 106,000. As long as we stay below that or reject that, probably looking at a lower low than we made back here in November. This is not the most bullish price action right here. I'm just very cautious about what's this price action that's formed right here is not bullish. Very overlapping. Every pullback overlaps prior swings. That's corrective, which means the trend was down coming into this correction here that we've done for almost 2 months. Continuation, whenever we top out, down to a lower low. That's the reality of Bitcoin right now. Things could change, keep coming back. I'll update you. You know, we could clean this up. It could have just been a crappy start, a leading diagonal or some crap like that, and then we clean it up and actually make a solid move. But right now, this is not the strongest start off of a low that we've got there. You know, crypto winter warning. I've got that sitting there. If we break back below 83,000. Ethereum finally touching the roadmap line, but not poking through yet. This also not the strongest way to get here, and it's a lower high at this point. We need a higher high. We need to break through. We need to do some bullish stuff. This is not bullish yet. Looks better, but it is not bullish. This a little, you know, that's definitely an overlapping diagonal right here. This high, skip the low, skip the high, this low, overlapping into that high. So corrective structure higher, pull back, higher low, but then this looks a little cleaner, less overlap, but also it did not make a higher high. If this stalls out right in here, turns back down, breaks below here, probably going lower low. This big 618 right up here, sitting at about 38.50. We could possibly make it all the way up there and reject and come back down. Very cautious here on getting sucked into crypto right now. This is not bullish. The opportunity to lose your money is high. Opportunity for more shenanigans is high. Global liquidity indicator pushing out, but U.S. equities lagging behind this push out to new highs on global liquidity. So is this leading by a couple weeks, or is this a fake out and we're about to see bigger chaos? Not sure which one at the moment, but there is potential that we see U.S. markets break out again and go higher due to global liquidity increasing here with NKD. Dollar definitely finding some resistance here at the roadmap line. That'll be 4 days now. We've been grinding it. It's a pretty strong indication right now that we may reject it and come back down here for a lower low than what we made right at the end of the year. Maybe set us on the path to make the lower low than we made back in September. So careful. As long as we're on the downside of that, trend is down. If we pop up through it, this pulls back, bounces and pops up through, retests from the top. Odds are we're going to start stopping out the short dollar trade, and that can lead to a large upside and a strong dollar, which may not go the right way for a lot of the trade deal stuff. Apple still grinding in here, looking for this to reach down and tap that roadmap line. Came all this way, it'd be a shame to miss it, but that could be close enough. Like we tested into that high right there where the gap up was, tested into it, could be good enough. So if we can hold on to that, break up back up through this consolidation, we can set up for more upside. Amazon, despite the pullback here, we still activated the target, 265. It can take a long time. Like it could take 7 months before we pop up there. It could, fart around in here for 7 months before we reach up and hit that. It's entirely possible. Just keep it in mind. Just because it's a super bullish pattern right here, 24 trades, that's not 30, but even if 6 losers happen, this is still going to be above the average with 95.8%. That means out of the 24 trades right here, 23 were winners. 1 was a loser. Profit factor 36. So Amazon has a long history of these trades working out. Kicked it off right there. Upside up here. But it could take 7 months. The average on this, 45 candles, which is just over 2 months. The standard deviation on that's 35, 3 standard deviations, the 99th percentile of time that it takes for this to work. 150 candles, 7 months. That's the reality of this price pattern. Sometimes it goes fast. That happened in like 2 candles. This one back here took a little longer. That one took close to 2 months. This one took a little longer. This one went pretty fast. This one took a little longer. That one happened in like 2 candles. This one happened about a month. Happened in a couple weeks. That one was the loser right there. Back in 2014. So be careful out there. Be careful out there. They don't always win. This one may be a loser. Stop is $1 below the low down here at around 212, 213. Google. If it's going to keep being bullish, probably going to rally on up to 385. I was sitting there reading news last night. I saw breaking news. Bloomberg, or whoever it was, Bloomberg maybe, announcing that Apple is going to use G-Mini for their new Siri. That's not breaking news. That was news 2 months ago. Like, they announced that 2 months ago. I don't know how that was breaking news, but apparently that's what pushed this up yesterday, maybe. Now, Microsoft was the first one to get hit on President Trump's, energy thing. He's like, this AI stuff is not going to cost American consumers higher on their electric bill. Microsoft's the first up to pay. And we're seeing this happen. Watch out below here. The funny thing is, though, if Microsoft's going to pay, how do they get that money? It's not like they just create money out of nothing. They charge consumers. So if you're not paying it on your electric bill, you're paying it however you pay for Microsoft. whether that's Windows, whether that's Office, whether that's because you bought something that somebody used to, virtually nothing in the world is made without some sort of touching of Windows, whether it's inventory management or whatever. There's going to be a tax. It's going to be levied out into consumers. We're going to pay for it one way or another. Same if they hit Google, same if they hit Amazon. I mean, it's kind of a flawed tactic, really, when you look at it. Meta concerns me. We didn't just turn around. We didn't get a bullish bounce yet. If this continues, it wrecks the pattern and we'll have to start over again at a lower low down here. Nvidia, watch out. Probably coming back down to test the roadmap line again. And if we don't hold on to that, 150 breakout test would be the next support down. Tesla. Yeah, SCHD. Tesla getting a little baby retrace. If we can hold on to that higher low on this pattern, we set up for the bigger bounce. If we break down here, if we go back down to the low, roadmap line would be where we're going to go more than likely. That's the next big major support area right down here. So I want to see it hold on to a little baby 618. It's going to look like this. Here's the low. Here's the high. Coming up on it right there at 435. So if we start below 435, probably going to push down to the roadmap line, down around 418, 420 on that daily chart. Right down in here, maybe 400. So watch out for that. There's the extension right there at 420 is what I was talking about, 418, 420. Netflix is still hunting a bottom. There was a bunch of bullish flow overnight, pushed prices up, but then this has a date with destiny right down here around 85. I'm not sure we can bounce till we get a flush out down here in the 85 area at this point with the softness that just keeps developing here. Yes, what would you say, Goose? SCHD? That's cool. Everything froze. And there you go. Pushing up. Schwab US dividend equity. Pushing on up. Here's the high. Here's the low. Adjusting for the dividend. Probably push on up to 30. But every time it pays a dividend, it reworks this chart. So you have to come back in and... Oh, I didn't even snap it back down to the candles here. Yeah, so getting into potential top there. Be careful. That can bring the next cycle. I always forget to adjust it for when you adjust it for the dividend. When the dividend is a big component, which almost 4%. On a lower price stuff, you kind of have to take that into account. Moving on, moving on. You just look at it on this potential, without taking the dividend into account, potential to come on up to 30.73. But it did play out with the bounce there on the daily. AGQ keeps being crazy. This is the more exponential this goes. Please be careful. 50, the higher silver goes, the easier it is to do a 50% pullback. Now, if this just catches up to spot price, we'll see over 100. over 100. Let's see if I can show you what I'm talking about. Yeah. Yeah. See, look, right here. This is what I'm talking about. 1 ounce silver coin, 107 bucks. That's a spot basically right there. 110 if you pay with credit card or PayPal. This isn't the US Mint, but close enough right there. Close enough. So if this catches up, that's another 10 bucks higher, maybe 20 bucks higher. There's a physical shortage in London where physical delivery takes place. We could see this squeeze on up. But at some point, this is going to run its course. And if we get to 200, a drop back to 100 is 50%. Now, I warn, AGQ is a 2x leverage, right? As long as we're cruising higher, this is great. If we get to the point where we get up into this point where 50% is not too crazy a pullback, AGQ with 2x leverage, 50% pullback, 50 times 2 is 100%. AGQ can go from whatever crazy number it is to 0 on that 50% pullback. This has now become a dangerous leverage ticker to play. Will it necessarily go to 0? Probably not. They'll probably reverse split it. But it can do detrimental damage to you and your account. This was a great opportunity when it was at 30. Now it's a dangerous opportunity. Now it's at 250. Protecting profits, getting the fudge, out of that, protecting it would be a wise decision. Wise decision. GDXU, maybe just resetting your risk. If you originally risked $1,000, now you're sitting on 10,000. Look at your profit, put it back to $1,000 risk. I mean, that's kind of the smart thing to do. High roller technology. And nothing to do there. JNUG. Be careful on that one. HII. Coming up into the target zone. 437 and 574 above that. Nugget crazy. PPLT. The next target up. Coming up at 270. Korea. I got nothing on this one. Maybe go back up to the 460 high, but absolute wild. SIVR, physical silver, keeps cruising. Still lagging SLV. We're up at a point where a pullback is going to be very likely. It can keep being irrational way longer than you can stay solvent, but the higher we climb, the bigger the chances of a swift pullback. I guess SLV is running slightly less. Strike that, reverse it. SLV running behind. Paper silver. Shiny. Now, SLV doesn't have the silver. They failed their audit. So be careful. Chasing after SLV. 50% pullback. Very likely here. Shiny. Likely. Just be careful on all those, especially the leverage ones. 3x leverage here. Might be time to step off the leveraged products. The risk of a pullback can be very detrimental. 30% pullback in gold can put this out of business. Day of reckoning probably going to occur. Baba, what a freaking bounce right there. As I said before, China probably going to be a big opportunity if we get above this 172 area. There's the upside. The yen is a 3x way to play long. CWeb is a 2x way to play. KWeb is another way to play. That one's lagging though. So yen looks like the better way to, if you want to cash in on China breaking out, pick up some shares here on the yen. Now, if you think you want to fade me, you think I'm wrong, play the yang. Although this one doesn't look like it responds very much. ETHU. This is 2x on Ethereum. Potential made a bottom. If Ethereum and Bitcoin can get their collective crap together, could see a big upside here. Just not feeling it. Not seeing it in the chart yet. Now, MicroStrategy or strategy indicating that we might see this rally back up here. As I said, for a while, this was potentially done on the downside for now. We needed a rally back to the roadmap line. That in itself could help put upward pressure on crypto, but that's not flipping it into a bullish trend, so be careful. HON, Honeywell, churning in here. Churn, burn. Here's the high. Here's the low. If we get the close above that 618 today, which I don't know, it's a gap up, but it's not a close above until we close the day. If we can get above it, close above it though, 234 would be the upside target area. 234. AEM. And watch out, this is stretching it out here, 201. The last big retrace on AEM, playing out there. Inium, playing out. B, starting to be played out. 53. Now, this is still bearish on, we're still lower highs here on Barrick. Be very careful playing. I feel like the opportunity has played out on a lot of those. Coinbase here. If we get through the roadmap line through the 618, this could have another run in it. TGTX. I know it's exciting. Gold, silver popping, breaking out, new highs. Potential to keep rallying, but it's kind of like the new AI trade, right? Like that's where everybody's hyped up on gold, silver. It's all the rage, all the hype. Just be careful. As AI fades, just remember that gold and silver is going to fade too at some point. Could be for much higher prices, but just keep your risk in check. WPM, 130. Nobody's going to ring a bell and say, hey, that was the top. It's just going to, you're just going to wake up one morning and it's down a lot. So this coming up into a target. Next target up 142. Another precious metal corporation. 2x on CLSK. CLSK. Check that one out. And grinding in here. Potential breakdown. ETHT, SCCO. Now, copper, I think, has opportunity still. We haven't really made a big run on copper, so we may see copper and copper producers get outsized upside. this hasn't really taken a big exponential move when you look at it here. We have potential opportunity. This would be pretty crazy, but we could take copper up here to like $14 a pound. That would be a reflection of inflation right there. Maybe even up here like $26 a pound. Going from 6 to 26. That's over 400% gains. Something like FCX, SCCO. Big upside on that. Just like the gold miners. Now this one's already played up pretty high. This one still relatively reasonable. But we could see like this thing could be up here at 200, like a 400%, you know. So chase the opportunity, don't chase the hype. I guess is the takeaway from what I'm trying to say. Look for the opportunity. What's the next one? Once they're already playing out, you got to find the next one. Because the market loves to rotate from topic to topic, thing to thing. And if you can be on the forefront of that, you can make money. If you get behind on that concept, though, it's where you get in trouble. And just to kind of illustrate that a little bit, let me pull this up if I can. This is the flow of attention in 2025. And we started out with like the Palisades fires and Greenland and inauguration and Elon Musk and DEI. And, you know, even though topics came back a little bit, you know, like inflation stayed kind of relevant all year, but it kind of peaked in here. And the flow of the peak. So investments kind of do the same thing. Everybody gets on it on this one thing for a little bit, and then we move on to the next hot thing. So it's not that AI won't keep being a fair investment, but it's not that gold won't, you know, keep having upward pressure or something like that, but it won't be the hot investment and it'll get the big pullback. So get a bigger than expected pullback. Watch for this one to find support in here and turn back higher. ONC. If we can get through the 618, 396 on the upside, Intuit. Ooh, ugly. I don't know where the downside is going to stop here. So far that's not indicating a bottom. TCOM, Trip.com. Ooh, ouch. What's Spirit Airlines? Save. Can't remember. Ah, come on now. Nope. Did Spirit Airlines go private? FlyYQ. Fingers, come on. I guess. So there's a social media post that they're not going to be able to make payroll this week. Zero real option here. Not going to be too good on that one. Spirit Airlines might go the way of the dodo. And let's see. AVAV getting a pullback. This one's set for the target up here, 457. SNPS. Choppy hot mess. BCTX. Dumpster fire. Don't touch it. Light. I've been warning this is due for a pullback. Be careful. Can be a pretty big, nasty pullback in the $200 area, if not even much deeper. PDD. Not participating with the rest of China. AMAT. Almost out to the 313 target. Watch for the retrace at this point. Need to come back to the roadmap line. Of course, we can push on out to 400, but ANPA, not enough candles to do anything with. AVGO, watch for the roadmap line hit. Possibly a little bit deeper here. ALAB. Need to get through that 618 to get upside. DR Horton, just churning. AMD, we need that hit down here at the roadmap line. 190, 180, 180, 190. Royal Caribbean. Watch out for a first move down, retrace, next move down. TER. Man, just keeps rocking and rolling here. Crazy. 302 next upside. PANW. It's turning in here. We need to get through that roadmap line. Then the 618 to get the upside. TCO. Churn. That's 3x on technology. Come back down to the roadmap line. Here's the high, here's the low. If technology can get its collective crap to get back together here, pop through, we can see the upside to 165 here. It's okay. This looks a lot like QQQs and might pop out. Let's look at some setups here. Oh, nice uptrend. Trend, pullback, continuation. Here's the high, here's the low, there's the entry. Target 237. 10 trades 60, 1.2. Nothing to write home about. Just the standard. There's the high, here's the low. Nice looking uptrend, pullback, continuation, be 1920. Low price stuff, be careful. No statistics that mean anything. Fair uptrend, pullback. You know, this might be a reversal that's set up in here. Here's the high, here's the low. 15 would be the upside on that one. And CVE, that's the wrong CVE. We need the New York version. Here's the high, here's the low. Entry, 1925 target. Ferguson. Here's the high, here's the low. Entry, 260 on the upside there. Maybe 262. Put the high on the high and the low on the low. 262. Nice. No statistics that matter. FREL. There were a lot of tickers on here this morning. 22, actually. Downtrend. Leave it. GPC, kind of a downtrend. I'd probably leave it. It picked the Python code, picked up that bounce right there. Might rally up to 137 and still be able to continue lower. Nice uptrend, pullback. Entry 104 on IMO. Average. This is just the average ticker right there. 75%, 1.2. That's just right on pace with average. If you wanted an average trade with an average win rate, 104 upside. Stop is dollar below the low down here at 82. KBH. And I don't like that kind of lower high situation. Coca-Cola. Here's the high, here's the low, there's the entry, 74 target. Doesn't even have to get a higher high. It didn't trigger because it's already in the trade back here. Looking for an even higher target. This high, this low, 75 up there. I'd go for the 74, more conservative. Lennar. Yeah, I don't like the lower highs situation, but 139. MPLX. Oh, that one's spicy. Already in it from back here, so it won't kick off a new entry on this indicator. 57 target right there. This high, this low. Yeah, 56. I'd probably go with the 56.50. Step off at the new high. NHI. In it from back here. Bouncing again. Target's 81. RP, RX. RP, REPX. Get the letters in the right order. Still 31 target. SLP. Still 21 target. STNG. Here's the high. Here's the low. Uptrend. Pullback. Continuation. 68. Stop is down here. $1 below the low. Down around 47. That's a reasonable one. So that's STNG. SYY. Cisco. The other Cisco. Yeah, I wouldn't touch that. TRC. I wouldn't touch that. TTE. Here's the high. Here's the low. 58 target. USRT. Choppy sideways. Targets up there at 59. VNQ. Choppy sideways. Targets up here. 94, but it's getting close to stopping out. And that one looks nasty. Sideways chop. Getting a lot of sideways chop in here. A lot of these tickers are showing sideways chop. That's not the strongest indication of continuation, but bias for the day. Let's go check out what we got cooking. See what SPY tells us. Looks like getting a little pullback here. Let's see, QQQ. Yeah, I don't think that's live. Let's see. Pull up the GEX heat map. Scam exposure. This is bullflow.io. I paid for this data. It's not free. It's not a product of mine. I have no affiliation. It's just a tool I found on X. We might be cruising down to visit this level down here on Friday, 610. This big level down here. Now, there's another big level up here at 627. We were hanging out up there yesterday. Right around this 624, 25, 26, 27, 28, 29. We were hanging out right there yesterday. Now we're down in here. We're kind of nearing the bottom of the GEX support, but we're in the red zone. The red zone means market makers hedging in the direction of the trades, increased volatility, and this big level hanging out down here is not that much smaller than this blue level up here. That might be where we're heading. We may take a trip down to 610. And it's not that crazy when you look at it right here. It's just a return back down here. Now we've already dipped and recovered a little bit. Chaos at play. We're sitting on the 618. On NQ, we start down below that, below about 25.5. Can kick it off down to 25 even. Yeah, we're holding the 618 so far on the Qs. Holding that prior low. We can come down here about 24,984 if we get any kind of downward pressure cooking. That's converting the Qs into NASDAQ, basically. Looking at the NASDAQ price. I have delayed data here, so it looks like we got some downward pressure cooking here. And then check out SPY GEX. I thought we might use whatever excuse we could to go down. And looks like maybe no decision again today. Might punt it again today. My favorite. And SPY, come on. QQQ data, SPY data. Come on, load up. There we go. So we got an 800 million level here. Ooh, 1.2 billion down here. That's $10 down on SPY. That's $100 down on QQQ. I mean on SPX. Say the right word. So 680 looks like where we're going to go by Friday. Got some downward pressure cooking here on SPY. Doesn't have to do it, but that's a big level. That's downward pressure between now and Friday. 500 million there, 1.3 billion there. Now, we could always reject it and just go cruising higher, but there's no big levels higher, so. Got an 800 million right where we are. So we might be pinned in this range, 680 to, probably 695 through Friday at least. Probably hang out in this range. Oop. 680, 695. I bet this is the range we hang out in through Friday. Somehow I'd pop that down to. So I expect it to hang out there. That's my expectation through Friday, really. To just kind of hang out in this zone. Don't really expect it to break out or break down. Just hang out in this zone. Pretty big fat zone, but that's where I expect price to stay through Friday. Could break out. I mean, anything's possible, but that's what we've got cooking right now. Using my night vision goggles for the market called Gamma Exposure. So that's what I'm looking at. Hopefully that was helpful. Looks like I've lost almost everybody, so have a great day, everybody. I will be back again, same bat time, same bat channel tomorrow. See ya. Thanks for watching.